Hey guys, wake up. It's February 24th, 2026, and crypto is bleeding red again. Bitcoin just dipped under $64,000. Ethereum's hovering around $1,820. Solana down over 11% this week. XRP shedding 10% plus. Majors are posting 8 to 11% weekly losses. And the culprit? Not just crypto weakness. An emerging AI scare trade is sucking risk appetite out of everything. If you've been bag holding through this grind or wondering if this dip is a trap or the start of something worse, stick around, because today we're breaking down exactly what's happening, why it's hitting altcoins harder, and what smart moves you can make right now. If you're new here or want more real-time crypto breakdowns like this, smash that subscribe button and hit the bell. Let's dive in. First, let's zoom out. Crypto's been in this brutal consolidation since early February, after that flush down to around 60K. Bitcoin's refused to break out or break down cleanly. It's trapped in this 60K to 70K band that used to feel like accumulation, but now it's starting to feel like a slow bleed prison. Why does this matter? Because the longer BTC fails to reclaim higher ground, remember, it's still 48% off its October all-time high and sitting below that famous 2021 peak of 69K, the technicals tilt bearish. Altcoins are getting crushed even worse. ETH near $1,820, down 8% weekly. Sol minus 11.3%. XRP minus 10.8%. Even DOGE almost minus 10%. This isn't random. On-chain data from CryptoQuant flags altcoin holders actively dumping at levels not seen in years. No dramatic crashes, just steady distribution into weak bids. That's why the bleed feels endless. Momentum traders can't catch the bottom easily. Point number 1. Bitcoin's range is now a battlefield, not a base. Analysts like FX Pro's Alex Kupcevich are pointing to a bearish pennant on the daily. Break below mid-65K confirms more downside. Reclaims 70K invalidates it. Historically, this 60K to 70K zone was the 2021 ceiling. Now it's where long-term accumulators fight newer holders cutting losses. Mini story. Think back to late 2021. Bitcoin topped here and then bled for months. Same vibe now, but with ETF flows and macro mixed in. Point number 2. Altcoins are under structural selling pressure. CryptoQuant data flags altcoin holders actively dumping at levels not seen in years. No dramatic crashes, just steady distribution into weak bids. That's why the bleed feels endless. Momentum traders can't catch the bottom easily. Example, Solana's been one of the strongest narratives, yet minus 11% weekly while BTC only minus 7.5%. Risk appetite is shrinking toward BTC dominance. Point number 3. The real macro killer. The AI scare trade is here. This isn't crypto native. A Citrini research report dropped a dystopian 2028 global intelligence crisis scenario. AI disrupting delivery, payments, software, mass white-collar job losses, crumbling consumer spending. It triggered selling in tech-adjacent equities, and crypto catches that risk-off wave on a lag. We're seeing the same liquidity drain. Investors reassess what's safe in an AI world. Crypto, as a high beta risk asset, gets hit hard. Bitcoin's now sensitive to these shifts just like NASDAQ stocks. Point number 4. Technicals tilting bearish without a catalyst. No clean bounce, no strong volume reversal. The longer we grind here without reclaiming 70K plus, bears gain control. On-chain accumulation in 60K to 70K is happening. Over 400,000 BTC bought in that range recently, but ETF outflows in fear are countering it. Myth number 1. This is just another healthy dip. BTC always bounces. Wrong right now. This isn't 2023 recovery mode. Prolonged range failure and macro fear means bearish tilt until a real catalyst, a Fed pivot, AI clarity, flips it. Myth number 2. Alts will outperform once BTC stabilizes. Not in risk off. Alts are leading losses because they're higher beta. BTC dominance often rises in these phases. Myth number 3. AI fear is overblown. It's just hype. Maybe long-term, but short-term, it's real. It's draining the exact risk capital crypto needs. Ignore macro at your peril.
So what now? Here's how to navigate. Watch key levels religiously. BTC below 60K risks faster drop to 52 to 55K support. Above 70K flips bullish. Reduce alt exposure if you're over-leveraged. They're bleeding hardest. Consider dollar cost averaging BTC in this range if you're long-term bullish. Accumulation data supports it. Stay liquid. Wait for a clear catalyst instead of fighting the bleed. Track AI headlines and tariff noise. That's the external driver right now. Look, crypto winters test everyone. This grind sucks. The slow bleed is mentally tougher than sharp crashes. But history shows bottoms form in fear like this. If you're in it for the long haul, this could be where real wealth transfers happen, from weak hands to patient ones. Question for you in the comments. Are you buying this dip, selling, or just watching? Drop your take below. Let's discuss. If this breakdown helped, drop a like. It really helps the channel. Subscribe for more no BS crypto updates, especially as this AI macro story evolves. Turn on notifications so you don't miss the next move. Thanks for watching. Stay sharp out there, protect your capital, and I'll see you in the next one. Peace.